the message today is very important to us, transforming bad debt into good debt. Indeed, debt is good when you put it into the right use, but when you put it into wrong ventures, then that's when it turns into a bad debt. So as they've introduced me, I'm a banker with Equity Bank, and I'm a certified financial literacy trainer. I'm very passionate about enterprise development and interacting with people to manage their money responsibly. So in case you want to contact me, that's my number, 0752615916. So we can go to the next slide. Next slide. Yes. So I want to start with what is a loan. And if you have a notebook somewhere, you can try to write down anything that you feel is important to you, because this is a critical topic to all of us. Basically, I want to give someone a chance to tell me what a loan is, then I proceed. What do you think a loan is? Can I get a volunteer? You can unmute and tell us what a loan is. Do you have any
they can feel
volunteer?
free to write in the chat.
Okay.
I think we have Wilfred. Wilfred, I can see he's trying to answer something. Wilfred?
Yes, hello.
Yes,
Yes,
Wilfred, we
please.
can hear you. Please go on.
Thank you. My understanding of a loan is money you get from someone or some institution or some organization, which you have to pay back with interest.
Powerful, powerful. Thank you. You've nailed it. As in, that means a loan is not your money. So many times we borrow money and we forget that it's other people's money. So in terms of a loan or in terms of money, you can use your own finances or you can use other people's money. But whenever we borrow money, we need to know that a loan costs money. For you to get other people's money, there is a cost attached because they forfeited use of their money. So the interest you give them is the costs, but also some administrative costs involved. So it means that when you are going to borrow money, you should always be prepared. You should also consult. Don't just rush into getting a loan without first preparing yourself, because it's other people's money. So that's important to note, that a loan is money that the borrower can use temporarily after a defined period of time. The money is repaid to the owner, usually with interest or a fee attached. So we've already seen that you borrow for a given purpose. There is another example of a young boy who was imprisoned because he just felt he needed money and went to a loan shark and just filled in papers, and he gave there his laptop. And when he failed to pay the money, they confiscated his laptop. So these are incidences that normally happen in our community. And remember, we are in a society where most people are youth. So without knowing the principles of borrowing, they just borrow without knowing that there are terms and conditions attached. So we need to know that a loan is another person's money, and you must take care before you borrow so that you borrow responsibly. Now, for us in the financial sector, one of the things we've faced is remarks like banks tend to take long to lend to us, but there is a reason why. remember that banks are the heart of the economy. And we've seen banks collapse because they lend recklessly. So since the banks are the heart of the economy, they want to ensure that they protect the customers' funds. And that's why before you borrow from a bank, we need to assess your condition to see, will you be able to pay? So that's why most of the businesses that don't borrow from banks end up struggling, because they borrow money without taking time to understand the costs and the terms and conditions of the loan. So we also know that our economy is 90% of our economy is composed of small and medium enterprises. So such a topic of loan management is very key, because we've seen businesses collapse because of failing to pay off loans. So it's important that an entrepreneur who is going to borrow seeks mentorship from institutions like Enterprise Uganda, from the financial institutions. We have business advisors who can advise you on the type of loan, terms and conditions that you do what? That are required for you to borrow. I should also businesses that have thrived on loans and have expanded. So as some people focus on the bad side of a loan, we have countless examples of businesses that are thriving on loans, because our own money can never be enough. Okay, thank you for this. I see Immaculate has given a definition of a loan. Thank you. Keep them coming. So we need to know that debt is money borrowed for a given purpose. Take note of the word purpose, because here in our topic, we are talking about bad loan, good loan. Those are going to drive us in our discussion, because if you cannot differentiate between a good and bad loan, that's where trouble starts from. So when you are going to borrow money, you must have a clear purpose for why you are borrowing. Can you give me some of the reasons why we borrow in the chat, so that we get to know what makes a good loan, what makes a bad loan? So from this discussion, we need to know that as you are borrowing, have a clear purpose for why you are borrowing. And then it's an agreement between the lender and the borrower. Before you borrow, you have your freedom. But once you've signed that agreement, you cannot run away from it. That's why it's very important, as you are going to borrow as an entrepreneur, to first understand the terms and conditions, the credibility of the institution where you are borrowing. And for me as a bank, I should say that it's very important for you to borrow from a regulated financial institution, because at least it's mandated to operate within the law. So in a loan, there is a time period. You should take note of the time period over which you borrow. Then also you have the responsibility of respecting the agreement. So it's very important for you to read the terms and conditions of the loan before you sign, because it's a commitment. Then again, under loan management, there is what we call the loan itself, but then there is what we call debt management, which refers to strategies to acquire, use or handle, and repay debts effectively while maintaining financial stability. This is a very important definition for us, that when you borrow money, you must have a strategy on how, one, where are you going to acquire the money from, how are you going to use the money, and also how are you going to repay the loan, and also where you are maintaining financial stability. I related with another customer one time who borrowed money, but they ended up draining their business and they struggled to even manage their lives. So when I interacted with them, I realized that this person neither has a budget, and for their business, they were not keeping records. They didn't have a financial advisor. they were not saving money. So you find that their life was really in a mess because they were not following the right principles of borrowing. So it's very important for us to know that loan management is a process which we need to follow. So as we can, so that we can, let's try to increase the font. Yes. Oh, and you can we go backward? Next, the previous slide. Okay. So we've talked of financial stability. Borrow money so that you can also manage your life. You don't need to get a loan that is beyond your what? Your lifestyle. So that's why it's important for you to even budget and see, will you be able to sustain the loan? Sometimes we take more money that we can sustain and our businesses end up constrained. Okay? So you must have a reason to borrow. For example, you can borrow to invest. Maybe you have a retail shop and you want to get a fridge. Or you want to respond to emergencies, like maybe URA is on your neck and you want to offset the tax obligations. Now, this last one is where there is danger. Sometimes you borrow to consume. It's important for you to borrow money that is going to add value to your business, since we are speaking to entrepreneurs. We can proceed to the next page. So, under debt management, we are looking at good loan versus bad loan. So a good loan is one borrowed with a clear purpose and is put into productive use. For example, as an entrepreneur, if you borrow to maybe add working capital to your business, or you a school and you have challenges with paying the staff of the school, that but you're expecting some money, I think that's a good loan. So the key thing under a good loan is make sure that you borrow for the right reason, like buying land, so long as it's not fraudulent land, you know. So have a right reason for borrowing so that you minimize risk. Because remember, a loan is also a risk to the lender. So that's why they always take precaution before they lend to you. They want to appraise to see if we lend to Mr. Moses, does he have the capacity and history to repay back the loan? So we also have a bad loan whereby it's a money borrowed without a clear purpose and is used for luxurious purposes. I interacted with a young man who borrowed money to go to the beach. And I don't know whether that was a bad loan or good loan, but for me, in my assessment, was that loan going to have a return? So the definition of good and bad loan sometimes is subjective to the person, but we've defined that a good loan is one where you put it to the right use, especially since we are talking to entrepreneurs. That is up to us to do what? To find out. Then again, under loans, we need to have this rule called 50-30-20 rule, whereby if you have money, make sure that 50% is for needs, 30% goes to wants, 20% goes to savings. Why is this important? Sometimes the reason why we end up with bad loans is that we neglect the personal financial management. We end up not saving money to repay the loan, and the time for collection of the money or the due date for paying the loan is realized and you have nothing. But if you know that I have a month to save for the installment, you must have a discipline of not waiting for the last minute, but when the bank calls you and then you try to get money from other sources. It's important for us to have discipline from the word go, that this is my monthly installment, divide it into 30 days, and you get to know how much money do I need to save per day, so that by the end of the month, you are able to pay without a lot of pressure. And trust me, as a banker, I've realized that most of the people who benefit from loans use this principle very well, whereby you save continuously, so that by the time the due date of the installment is realized, you have the installment. You will only be in bad books with the bank when you've defaulted, but when they see you are consistent, you are trying your best, you will never have issues with banks. Most of the people who have lost their property, they don't intentionally build a relationship with the bank. But if you research most people who have benefited from loans, people who have built schools and expanded, they use this principle very well. They relate well with the institution that lent them. So it's very critical for us to always have a working relationship with the bank, because we need each other, or with the financial institution where you borrow from. We are partners in business. So you'll find that people who neglect this relationship management with the financier, they end up bad-mouthing financial institutions, yet they didn't take their role also seriously. So one of the key action points from this training is that we need a mindset shift from us seeing financiers with contempt. There are even other people who say they want to take our things. Not really. A bank is there to protect customers' deposits, and that's why we ensure that we treat you as a partner in business. So some of the factors when you are borrowing, remember our topic is turning bad debt into good debt. So these are the things we can do to ensure that if you have a bad debt, how best can you change perspective so that it turns into good debt? Are we following? Hello? Are we
Yes,
following? Great.
yes, we are
Thank you.
following.
Can we go back to the previous slide, please? So there are some factors to consider when we are borrowing. One, you must have a clear loan purpose for borrowing. So I deal a lot with micro entrepreneurs, and one of the issues that they face, they don't know how much money they need to borrow. So for them, they just borrow basing on feelings, and that's where problems start from. We need to know that borrowing should be a clear process. So when you are borrowing, have a clear purpose for why you are borrowing. That's why mentorship is very important. That's why any entrepreneur should have a business mentor who can advise you on why are you borrowing. Some of our small businesses borrow. At the end of the day, they don't have a clear policies for borrowing, and they end up misusing the funds for what? That they've borrowed and they struggle to pay. So we must have a clear purpose of why we are borrowing. Two, also, when you're going to borrow, you must first assess yourself. Do you have a budget for your business? Most of our businesses don't have a budget. So you end up borrowing money that is more than the capital that you have in the business. So chances are high you do what? You end up struggling to pay. So when a bank is lending to you, it looks at your source of income. So we need as entrepreneurs to respect our businesses and ensure that the source of income is built intentionally. For example, any business that is going to grow depends on the quality of the entrepreneur. If the entrepreneur doesn't focus on continuous learning, even if they get loans, they will struggle to pay because your business cannot grow beyond your knowledge. So that's why I encourage people on call to subscribe to Enterprise Uganda, because they make entrepreneurship practical, to get to know when you borrow, how do you relate with the lender, you know? So as you're going to borrow, always consider your income sources. For us as bankers, when we are lending to you, we need to know your cash flows. Coincidentally, some of our businesses don't have accounts. You find a tomato seller, they mix their money with the business. So at the end of the day, you cannot differentiate between the ability of the business and the what? And the entrepreneur. So one of the action points from this training is that however small the business is, try to separate business money from your personal money, because that's called the separation principle. Because under law, the business is a separate legal entity from the entrepreneur. But most of our micro entrepreneurs don't separate business money from their own money, and that's where problem starts from. We can proceed. So again, when we are borrowing, we need to look at the interest rate and terms and conditions. We are in an economy that is free. So entrepreneurs make choices on their own. But as you are borrowing money, it's your duty as a borrower to look at the interest rate, because sometimes we go for high interest rates and we don't even negotiate them or try to understand them from the lender. What most people need is the money. But have you tried to sit down and calculate, will the business afford to pay this interest rate? Have you read the terms and conditions? There are people, entrepreneurs, who have lost their homes, cars, to loan sharks because of not reading what? Terms and conditions. So a financially literate entrepreneur is the one who sits down and says, since I'm the one to pay the money, I need to understand how much are you going to charge me? Will I be able to afford this interest rate? You know? So let's treat borrowing as window shopping. Before you borrow, try to go to different financial institutions and understand before you rush to focus on one, so that you get the friendly interest rates. Then also look at the total cost of borrowing, like the fees charged. There are some people who borrow money, then when they deduct some administrative costs, they think the loan is for free. There are some charges that you must understand before you borrow. And it's your right as a customer to ask the lender, what are you charging me? So that there is transparency. And if you're borrowing from an institution that is not clear about the costs, run away from that institution. Also look at alternatives like savings. Before you borrow, do you have a backup plan? That's why when you're borrowing from a bank, we always want to know, where do you save your money? Because your savings discipline plays a critical role in enabling us to know how much money you qualify to borrow, you know? So savings discipline is very key as you are borrowing. Then the risk of default is very key. We cannot lend to you when your financial card is showing you're a multiple borrower, you've defaulted on loans. Now the national ID is showing that Momo Pay is looking for you, Airtel Money is looking for you, you've defaulted everywhere. So we also look at that. Then we also look at economic stability, like do you have a job, market conditions? For example, if you're selling charcoal, yet there is a pending ban by the government on cutting trees, chances are high when you borrow for such a business, you are likely to run into a bad loan. Then also look at the lender credibility. There are so many mushrooming institutions that lend. So can you take time and research about the institution? Who regulates that financial institution? Because in case there is a dispute between you and the lender, where can you resort to? So how does that institution treat customers? Then we also look at loan amount and period. Always don't borrow more than you can afford. And also when you take a longer time, the more interest you pay. So all those are things you should consider when you are borrowing to avoid a bad loan. Then the loan installments, basing on the type of business and cash. Some of the loans go bad because of the negotiation. Now imagine you're a farmer growing maize. Then you go on to negotiate for monthly repayment. You are likely to fall into a bad loan because the business may not afford. So it's very important for you to sit down with the financial institution to understand you very well, because the bank is interested, or any financial institution is interested in helping you grow, not to take your property. So that's why it's important to borrow from an institution that listens and cares about your needs. Then where and when to pay the installments. Sometimes our repayments go bad because maybe the institution where you borrowed from doesn't have enough branches. So as you are borrowing, try to find out the distribution network of the institution, because maybe on the day of repayment, you are far away from a branch. Does such an institution have mobile banking? Does it have agents? So that you don't go into disputes with the lender. We can proceed. So when we are lending to you, we also look at, when you are analyzing your ability to pay, always as a business, look at your monthly income. This is where records are very important for your business. However small your business is, try to have records. Have a financial consultant whom you can even pay some money to help you make for you simple systems on how to record, because without records, it will be very difficult for the financier or the lender to know your projected income so that they can lend to you against the income. So it's very important. I normally tell the micro entrepreneurs that I train that you must have tailor-made books for your business, because that's what a bank is interested. They want to know with predictability, how much are you earning per what? Per day. For example, even Boda Boda is a business. Boda Bodas earn on a daily. But the challenge is, since they earn per day, they end up not keeping records. One of your records is your account. As a business, I encourage entrepreneurs on call to open accounts for their businesses, because that is a key indicator to a lender that despite this business being informal, at least the entrepreneur has a trajectory in a financial institution. So I encourage you to have a separate account or separate accounts for your business and individual, because to a lender, anyone who does that, they see them as organized, they see a going concern. But most of our businesses are risky because we do not separate business money from personal money. Then we also need to know monthly expenses. As we are lending to you, we need to know, is your income more than your expenses? Do you have a surplus? Because if your budget is already showing you are in deficit, how will you be able to offset the loan? That's why it's important for our businesses to have a budget so that you can get to know, are you able to cater for the loan installment or not? Then cash flow is the mainstay of the business. Do you have some of our businesses end up overspreading, others invest in hard assets, and yet we know that cash is the king for the business. So it's important for us to always have some liquidity so that in case, for example, you want to pay for umeme, or you want to pay for license, or you want to buy goods for the business, you have cash. So sometimes we end up in bad loans because we don't have liquidity management policies in our business. So that's why it's important for an entrepreneur to seek advice or to seek expertise from institutions like Enterprise Uganda, so that your business always has enough cash flows. One of the things that fail our businesses as entrepreneurs is to think that because you started a business, you know it all. But all businesses that have succeeded have mentors, have advice, and they pay for it. So that's why we want to thank Enterprise Uganda for always putting such webinars, because they help us to understand that we don't know it all, and we can seek advice from practical business advisors. And so many successful businesses attest to the support from Enterprise Uganda and also other enterprise development consultants. So one of the key action points for us as entrepreneurs, whether you're a startup or you're already an existing business, is to always seek expertise from successful business people so that you have a going concern. So these three are very important as we are lending to you: monthly income, your expenses, and cash. Always look at that. We can proceed. These are types of loans: youth loans, agricultural loans, asset loans, education loans, business loans, working capital loans, bank assurance, mortgages. So it's important for us as entrepreneurs to know which type of loan are you borrowing. It's very important. Are you borrowing? So the bank lends to you according to the purpose of the loan. So if you're into agriculture, it has different terms and conditions. If you're buying land, that's an asset loan, different terms and conditions. So it's very important before you borrow to go to the bank and window shop and ask the loan officer, so that you make informed decisions rather than rushing into a loan. We can proceed. So how do you turn a bad debt into good debt? These are the steps I put down. One, identify and eliminate bad debt. One, some of us borrow and we don't even know how many loans we have. Good financial practice is you sit down and try to put down all those loans that you have, so that now you strategize which loan should I start with? Because whenever you pay someone, you build your confidence. But imagine like living in denial. Everybody is borrowing, everybody is demanding money from you, but you are living in self-denial. You don't even know how much interest you have to pay. That's why sometimes the loan sharks end up taking people's property, because they try to reach out to them. They don't pick calls. So when the lender wakes up, they will take everything that you have. So it's very important for us that when you have a loan, you don't live in denial. I've found so many ladies, these ones who borrow from groups, you ask them, they got money as a group and other members didn't pay. So for them, they think that since the bank is not contacting them, they forgot about the loan. So at the end of the day, there are those who have loans that they didn't pay for 10 years, thinking that the bank has forgotten. So when they get an opportunity and they want to borrow again, they're already in a what? In a mess. So we need to encourage entrepreneurs that when you have loans, be proactive and reach out to your lender and negotiate with them the paying modalities. Because banks are not buildings, we are human beings, and we listen. So we need to have a change in narrative whereby the society doesn't see banks as thieves, but as partners in business. 2, consolidate and lower interest rates. Use low interest loan to repay off high interest debt and reduce overall cost of debt. Now, this one goes back to knowing that a debt costs money. It's important as you are paying a loan to see the interest you are paying, the costs involved, so that you plan accordingly. How am I going to repay off the loan? Take off time or even have business advisors around you to take stock of your business. You can hire an accountant and they give you a candid talk. How best can I repay off this loan? Than thinking you are the expert in everything. So you've seen that it's very important as you have a business not to live in isolation. Even if it's a small business, you must have maybe a board of directors. There are people who have experience and they can even give you guidance for free, rather than working hard for your business and you end up seeing everything go and also your property. So people who have succeeded in using debt, they don't think they are experts. They are vulnerable to seeking learning, but also working well with their lenders so that because each one supports the other. Without a financier, you cannot move forward, but also a financier without you, they cannot move forward. The other issue is borrow for the right reasons. Borrow for the right reasons. This one is very important. Only take on debt that generates wealth, such as business loans for growth and expansion, mortgages for appreciating assets, education loans that increase earning potential. We need to know that as entrepreneurs, we are companies. How you must even have a budget for attending courses, because the more knowledge you earn, the more your earning potential. So when you borrow maybe for a course, that's a good loan because you are increasing your knowledge on how to manage a business. So we need to have the right reasons for borrowing. That's why any business, regardless of size, should have a board of directors such that you are accountable. Many times entrepreneurs borrow because they are everything. But we need to know that when you start a business, it's not yours. It is for society. So even as you are borrowing, you need to borrow for the right reasons so that when it comes to payment, you don't struggle. At least there is accountability. And also, when you are borrowing, have accountability partners so that when they guide you, they may give you credible advice. Then also build a repayment strategy, create a structured plan to pay off the loan steadily without stress-free. It's important for the borrower to know their rights. You know, some of the borrowers fear banks so much that they leave everything to the bank. Sometimes when you struggle with the loan, if you are informed, you can go to your lender and they restructure the loan. For example, during COVID, banks realized that so many customers were struggling because people were not working. So they restructured loans, and at least you could see that after COVID, businesses stayed afloat because they renegotiated with the bank. So when you have a challenge, you can go to the bank and they do what? They restructure your loan. The worst thing you can do is to just forget about paying the loan and you think the bank will not come for you. So you must have a debt repayment strategy that guides you on how you repay the loan, and those are the people who benefit from loans. We can proceed. Okay. Again, we are on strategies to turn bad debt into good loan. Track and optimize your progress. Monitor your finances to ensure your debt is working for you, not against you. You remember what we said, that a good loan starts from the right purpose. So if you borrow money and invest it in the business, you find that chances are high the loan will help you to grow your business. Though sometimes there are other factors beyond you, but at least you do your part. So here, any business requires a qualified finance professional, because we cannot be good at everything. So if you have, let's say, someone who is a part-timer, comes and sees analyzes your books, they will be able to signal where you are facing issues. You should be able to, sometimes micro entrepreneurs borrow money and their staff end up swindling because there are no records, there is no accountability. But if there is a system for monitoring, you'll be able to optimize your loan and ensure that it's put to good use. So the other one is seek advice from experienced business professionals. Like I emphasize, Enterprise Uganda, financial institutions, we are trained to help you out. So there are so many ways you can seek feedback. Don't die in your own movie. So many entrepreneurs are struggling simply because they keep to themselves. But today we have so many service providers who can give you advice, who can even do a business health check, like Enterprise Uganda does business health checks, so that you can get to know what's the temperature of your business. So, one time I asked a micro entrepreneur, a market vendor, ever since you started, how much capital do you have in the business? They couldn't answer. So those are the people who go to loan sharks and they borrow more money that is more than their business. But if you have a finance professional who has designed for you customized business records,
to get to
if
this.
you have maybe an angel investor who wants to invest in your business, they want to know how much money, how much capital you invested, what is your current capital you have. So you realize that records are the cornerstone of any business. So I want to encourage business professionals to always seek advice from experienced business professionals. One of the things I advocate for if you want to grow your business is to have a business plan, because without a roadmap for your business, it will stagnate. So even the business must have an investment strategy, a debt management strategy, so that you are guided by strategies, not wishful thinking. The other one is ensure you use the funds for the intended purpose. Most of the people who struggle to pay loans are because they divert money into unplanned ventures. That's what we struggle with as bankers. You find someone told you they're borrowing money for their business and they end up buying fraudulent land and then they help you pay. So I want to encourage you that if you want to turn bad debt into good debt, you need to borrow for the right purpose. Then live within your means. Many times because of pride, because of the arrival mentality, entrepreneurs end up being extravagant. They get business money and they end up renting in expensive places. Yet we know that a business is like a child. You need to nurture it. We need to learn from the Indians. I normally give this example. You find an Indian comes to Uganda without anything, and they are frugal with their finances. They live with their relatives, but within 1 year, this Indian has a successful business. So there is something to learn from those Indians, that they don't just spend money anyhow, because once a business struggles when it has borrowed, then it's likely to collapse. So we need to be responsible financial managers if we are to turn bad debt into good debt. Then have a debt management strategy. You must be guided by policies. When is the installment to be repaid? How am I using the finances? Have you recorded down people you lend to? Their businesses that collapse simply because they cannot track people whom that they've lent to, their debtors. They also don't track their creditors. So you end up seeing that the business struggles to account for the money that they owe to other suppliers or people or customers who have taken goods on credit and they cannot repay. So it's very important, regardless of size, for a business to have a debt management strategy. Next. So also borrow from a regulated financial institutions. It's advantageous because in case there is any problem with the lender, at least we have a regulator. Then you can restructure the loan. In case you are facing cash flow issues, you negotiate with the lender. This happens so much with regulated financial institutions such as banks. Then we need to save as we earn. Debt management goes hand in hand with personal financial management. You as an entrepreneur, if you are a poor financial manager whereby you live beyond your means, you struggle to pay the loan. So the best principle under financial literacy training is whenever you earn money, save a certain amount. For example, when you've calculated your installment that it's 300,000 per month, that means every day you should set aside 10,000 such that when the due date arises, you already have the money. So it's not the amount of money that you earn that matters, it's how much you can save that matters. That's why it's important to have an account in a financial institution so that you don't save your money at home, because there are so many distractions that will force you to divert your money. Then enhance your relationship with the lender. People who have benefited from loans build a working relationship with the lender. In fact, they even call on the lender. They are friends. But I found so many customers who create, after getting the loan, they don't pick up calls. They don't even invite the bank. They only invite the bank when there are problems. But a successful entrepreneur will treat the lender as a partner in business. Just like you have a medical doctor when you face financial issues, it's the same way you should treat your lender, especially regulated financial institutions like banks. Because we are partners in business, without you, we cannot succeed, and without us, you cannot succeed. So we need to change our attitude in how we view banks. You must go to your business manager and even thank them for availing you money. And also, they visit your businesses. Sometimes banks can even link you to networks where you widen your customer base. Then you must market your business. Sometimes we borrow, but we don't take time to market our businesses. Remember, it's customers who will give you money to repay the loan. So if you're not proactive in marketing your business, that means you'll face cash flow issues. And imagine Coca-Cola has existed for all this long, but it's everyday marketing. But you find some of us are very comfortable with where we are. We are not on digital platforms yet. We know that over 70% of Ugandans are young people who buy from your business. So we need to also have an intentional marketing strategy, branding strategy for our businesses, and ensure we treat customers as the king because they are the ones who give us money. Let's also ensure that we pay according to the loan terms. This goes back to financial literacy, but also making the lender your friend. Before you sign on that loan agreement, try to read through every detail so that when it comes to repaying the loan, you know the terms and conditions. Next. Next. So basically, I'm going to run through these because I've said most of them in the previous discussion. Why do we need to convert bad debt into good debt? One, it lowers interest rate costs. So remember, a debt is other people's money. So we need to ensure that we pay on time. And when you are good at repaying, then the next time you want to borrow, you have an upper hand. There are even customers who are able to negotiate with the bank the interest rate because they have a history of repaying well. Then it improves your credit score. That is better financial health and opportunities. For example, we have agents who need float. Many of them are able to get a lot of money from the bank float simply because they are good at repaying. So if your account is consistent with paying well but also saving, it increases your chances of borrowing huge amounts. Then boost cash flows and investments. Use your money to build wealth, not to repay debt. So ensure that as you're borrowing, you have a clear strategy. Why are you borrowing? Ensure that the reason why you are borrowing is to put the loan into good use. Especially since we are speaking to entrepreneurs, let's ensure that as we borrow for reinvestment in the business and we track returns. You must ask questions. You must have a seasoned finance practitioner whom you ask questions, but who is also accountable to you because they are experts in that area. So it also reduces financial stress. Structured repayments make debt easier to manage. So when you structure your repayments well, you will not hear the so many calls from the lender. Some of the reasons why borrowers fear banks or fail to pay is because they don't put a proactive working relationship with the bank. They only wait for calls at the last minute. So chances are high you face pressure, and this also affects your health. But if you are proactive in treating the lender as an ally, not a foe, then you are likely to benefit from the loan. So I should say that borrowing is good because money in our developing countries is never enough. But as we've seen from the discussion, we must have the right perspective about loans. We also have a duty to create the right discipline in managing money. Most of the case studies of businesses that have collapsed or have struggled to pay loans is because there was inequality in the equation of the lender and the borrower. So you've seen that as borrowers, we have a lot of responsibility to ensure that the loan is in our favor. But as we've seen, if there are so many people who have benefited from loans, why not you? So the conclusion is the last page. Debt is good. Debt is good if used for the right purpose. Without guidance, it is easy to misuse the loan and end up financially distressed. With adequate mentorship and guidance, an entrepreneur can benefit from borrowing as seen from above. So I should encourage entrepreneurs on call that there's so many funding opportunities, but it's our duty to move out of our comfort zone and become students of debt and seek advice from institutions like Enterprise Uganda, like banks like Equity Bank, because coincidentally with banks, we give you free advice without paying because we are in the business of lending. And the worst thing to a bank or any fund or lender is someone who doesn't pay well. And on a national level, when so many people fail to pay, when so many businesses fail to pay, there can be a banking crisis, which you remember what happened during the financial crisis in 2008. That's why banks take precaution as they are lending to any entrepreneur, because any bad loan is a cost to the bank. We have to ensure we provision for bad debts. We have to look for it increases the cost of monitoring the loan. So it's important from the appraisal stage to ensure that the person that they are lending to is the right person, their business is in the right condition, and there, if we replicate it to a national level, I strongly believe we can have a better economy. I want to thank you so much for listening to me, and I want to thank Enterprise Uganda for giving me the opportunity to present to the important people in the nation, because you are the ones who make the economy. As we saw, 90% of the economy is made up of small and medium enterprises. Keep up the good work as we build the nation together. May God bless you.
Amazing. Thank you so much, Mr. Phillip Kiryowa, for that very eye-opening, very enlightening, and very insightful session concerning debt and how well it can be managed, how well entrepreneurs can manage it. But also you've shared great insights and perspectives on how bad debt can be turned into good debt. Ladies and gentlemen, please do go to the chat and just give a hand clap to our presenter this morning. Our host, I'm counting on you to let me know just in case my network jumps off. And I like what you said, that debt is good if used for the right purpose. And indeed, entrepreneurs need to get guidance and mentorship just in case, things don't go as planned, because usually or sometimes an entrepreneur can easily go in for a debt for the good cause, and then business goes not as planned, and so it ends up being a bad debt even without the intention of this business person. But you've shared great insights of how this can be managed. And so we want to get into our Q&A session. Mr. Kiryowa is with us. He has told us he works with Equity Bank, and I'm just going to project his number there. 0752 615 916. That is Philip's number. Just in case you want to get in touch with him, you can always make an appointment. And let me go to the chat and see if there are any questions. Yes, Martin says, thank you. Thank you for the presentation. And I see, yes, Martin is also asking, what is bank assurance? You will talk about that in a few. The rest is Immaculate, James, Fiona giving you hand claps, and Walter. Thank you. Please do put your questions in the chat so that we use the next 10 minutes to wrap up this session. Mr. Chuya, let me bring you back here and talk about bank assurance because it's a question that has been asked twice.
Okay, thank you very much, Anita, for that question. And thank you, Tim, for the support you've given. You know, someone taking their time to listen to you, you can't take it for granted. This is a working day and entrepreneurs are normally busy. So we thank you so much for always taking some time to listen to Enterprise Uganda sessions. About bank assurance, basically, you know, it comes from insurance. Now, here, banks like Equity Bank have a fully fledged department that deals with the various types of insurance for individuals, for businesses. And so here a bank just acts as an agent on behalf of insurance companies. So you can come to Equity Bank or any other bank to find out how can you be able to buy insurance policies from insurers or insurance companies. So basically, because you know life is about risk, so we have bank assurance services in financial institutions like my employer, Equity. So we encourage you to come and subscribe for the various types of insurance from as low as 3,000 so that you can secure your life, your children's education. Imagine your small business catching fire and you don't have any insurance policy. You can lose it all. So basically, that's a brief about insurance. Bank assurance.
So much. Yes, thank you so much, Philip. Right here, I see Charles asking, how can lenders build relationship with borrowers, especially where the borrower looks not to be interested in building the relationship? Right there. Thank you so much, Charles. Over to you, Phil. Phil, did you get that question?
Yes, I had started
Yes.
speaking without unmuting.
Oh, sorry.
But I got the question. I'm lucky I've been in the financial services industry for some time. What I would advise any person who is borrowing or who wants to benefit from financial services, we need to a mindset shift to know that just like you have a doctor or a stylist, fashion stylist, banking should be a lifestyle. So if you find anyone who is not proactive in building a relationship with the bank, it's an indicator of someone who needs mentorship, who needs a bit of financial literacy training. Because at the end of the day, a banker is providing you with a service. So it's very key to take this as a win-win. From a financial perspective, for us, we've not waited. For example, in the bank I work with, we are proactive in providing free financial literacy training to grassroots investment clubs, to individuals, and we've seen so many young people who feared banks. Today they have more than one business. I know the young boy, we visited him after to find out how successful he had become. This young boy is 25 years. When you look at him, you can't know how much he has in the community. He already has a house. He has borrowed more than 3 times. So for me, my thinking is it's lack of exposure or awareness for why clients don't end up building a relationship with the bank. But for us as banks, because we look at the end in the mind, we know that any micro entrepreneur or any person needs the bank. I also saw a young graduate, university student who said they don't need a bank. For them, they want to keep their money with themselves. So it was an indicator of lack of awareness. So it's our duty as business service providers or financial practitioners to keep on the message, because our level of growth as a country is not yet up to speed. So we have to keep on enticing people through such platforms. Thank you.
Okay, thank you so much, Phil. And I do commend the work the financial institutions are doing in regards of making these services available to the public. But also, we've also seen the bank reaching out and doing the financial literacy yourself. You do a lot of financial literacy on behalf of Equity Bank, sensitizing community. And I think this is important because the entrepreneurs need to hear this, but also individuals who want to venture into entrepreneurship also need to hear this so that they make informed decisions. And so there you go, Charles. I hope this has been answered. So Philip, Immaculate says, please throw more light on a debt trap victim. Ideally, this borrower probably already lost the business and all properties, and their cash flows are too small to finance the existing debt. What can they do? We hear of debt managers. Who are they? What do they do, and where can they be found?
Okay, thank you so much for this question. Indeed, you can be in a debt trap, and I can assure you as a financial literacy practitioner, one of the things that keep motivating me to share is we are dealing with real life. One of the things I've discovered with financial management is it starts with the mind. Many times, so many people are in financial situations that they can overcome, but because of lack of guidance or mentorship, they only look at the current reality. And coming into a debt trap is a process. Sometimes you find someone making debt a lifestyle. There are people who borrow to consume, and they feel they know it all. Unfortunately, that challenge with financial literacy, each one of us is an expert in their own way. So changing someone's narrative or mindset towards how they handle their money requires authenticity, vulnerability on the part of the borrower to know that I'm in a debt trap. There are people who borrow and they don't even know how many loans they have. So they live in self-denial, and in that way, they end up not seeking advice. So the first thing to do is a reality check to know your current state. That is the first step, to know where have I gone wrong. Then secondly is to seek out those institutions that can help you at no cost to do what? To know the current reality and how you can overcome it. Because remember, when you borrow money, the lender has a stake in your business. So you cannot run away from them because they also gave you their money. So I think there calls for maturity to know, you know what? I have this issue. How can we go about it? I think it calls for being solution-oriented rather than focusing on the problem but asking yourself a question, how can I overcome this? Because when you ask yourself questions, then answers start coming in. It can be as simple as you going to the financial institution where you borrowed to sit with the manager. The bank will see you in a different light. So I can't say I have all the answers, but it's very key for a borrower to be proactive in seeking help from financial practitioners, but also to know what caused the financial or the debt trap. Because there are those who make borrowing a lifestyle. Remember, every loan has its own terms and conditions. I normally tell the community where I train, but why do you borrow from different sources? Yet even one bank like Equity can lend to you as much money as you want. So it's very key not to borrow from several sources. You can stick to one lender so that you build credibility. Most of the issues we are facing in society are multiple borrowers, whereby someone, when a lender calls them, they reach out to another lender. So you find they keep on multiplying the debt. So sometimes it can be giving a banker a call. I help so many people on phone and encourage them. Sometimes you just need a word of encouragement that you can make it. So I shared my number. She can reach out. But again, there are so many practitioners who can help you so long as you go to credible sources. And also you can reach out to Enterprise Uganda. Thank you.
They can definitely reach out to Enterprise Uganda. And yes, Mr. Phillip has shared his contact, so please feel free to reach out to him. Again, please don't go to Lumumba Avenue. The offices of Enterprise Uganda shifted to Butabika, just opposite the hospital. You'll be able to see the structure right there. Philip, I'm going to invite you to answer one last question before we get some administrative communication from Enterprise Uganda. And Josephine says, I think let's start with Walter's question. Is there a provision for the youth to borrow a loan without giving security? Because he says most of us don't have property assets to use as security. Now, I know you hinted on this earlier, but just in a few minutes, since our time is far spent, so that we also address Josephine's question. Kindly address Junior's question, and then we go to Josephine's question.
Wow. I knew that question can't miss from Anita, your passion for young people. It's evident. I'm also very passionate about young people. I'm always concerned about the statistics of the unemployment statistics. And being a banker, it's my duty to educate the nation about the opportunities that Equity Bank has for the young people, because over 70% of this nation is made up of young people. So the question we should always ask ourselves, how do we help these young people to access loans? Because many of them have brilliant ideas, but they don't know where to get capital. So as Equity Bank, we have a loan for young people aged 18 to 35, and we know that most of the young people don't have collateral. So what we do is that we look for youth who are in organized groups that are registered. We open for the group an account so that they can save with us. Then the individuals in that group can borrow from 100,000 to 5 million individually at a very low interest rate. And this program has been running for the last 5 years. And I can confidently say the transformation that I've seen amongst the young people for attending the free financial literacy that we give them, but also them getting confidence in running their businesses to the extent that many of them have become manufacturers, gives me hope that each young person can become a job creator, because after all, statistics show that Uganda is one of the most entrepreneurial countries in the world. We have that opportunity for young people. Kindly reach out to me and I'll advise you and we can lend to you without security. You just need 2 guarantors and we train your group because you are the future job creators. So don't doubt your dream. Reach out to us. We shall encourage you. We shall train you in business management. We shall link you to other institutions that can really build your business. So there is a lot of hope for young people. Just reach out to me and I'll link you to Equity Bank and maybe Enterprise Uganda.
Amazing. Okay, thank you so much, Philip. Let's end with Josephine's question. She says, when someone gets a loan that includes insurance, just in case the borrower dies, does the bank return the money in case the borrower does? I think they didn't come out well. I don't know if you can see the question in the chat, but yeah, she's asking what happens if the loan is insured and the borrower dies? What happens in such a case? Sure.
Wow, that's a good question. One of the things I want to encourage entrepreneurs on call is to understand financial literacy. Today, financial literacy is a very important concept. That's why the government is prioritizing it. In that, financial literacy looks at how you handle your personal finances. Financial literacy looks at all the sector players in the industry, like how do you invest your money, insurance, debt management, consumer protection guidelines. So one thing I want to tell the entrepreneur is that financial literacy is very wide and it has so many players in the market. So when it comes to regulated financial institutions, when you borrow money, the loan is insured. In that, in case there is a catastrophe, let's say you are a border and maybe you find robbers and they take the what? The asset, the border or motorcycle. If you're proactive enough and within time, you reach out to the police and you report, but you also inform the bank in time, you've done your part. And there, because risks sometimes in life are inevitable, but what have you done about it is what is important. So the banks, so long as you follow the right procedures, insurance assesses, and many people have not paid loans. So that's what we said, that when you go to find the terms and conditions of the loan, these are things that you should ask. Don't borrow from a lender who doesn't have an opportunity to explain to you that in case of death, what happens? In case of risk, what happens? So it goes back to us that we need to know our rights as borrowers, and it's the duty of the bank to explain to you, this loan that I'm taking, is it insured in case of risk? What might happen? So that you make the right informed decisions. But most loans have a provision for insurance such that in case of any eventuality that is beyond the entrepreneur, the insurance company can come in and pay the loan. But it's a process, but we need to be proactive in finding out from the bank and knowing a borrower. Thank you.
Again, thank you so much, Phil. Ladies and gentlemen, please let's go to the chat and appreciate Phil Kiryowa for taking us through this conversation and leading us very well. Thank you so much, Phil. You've done us well. And one thing has come out clearly, that debt in itself is not the enemy, but mismanaged debt is. So when aligned with purpose, it can be a bridge to opportunity. So thank you so much, Phil. With that said, Mr. Philip is going to type his contacts in the chat, and he'll be sharing them with you.